Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Rima. Guys, hi. Morning.
Hi, good morning. It looks like it could be a better day. For one, maybe we retrace some of the fall that we had in the last 1 hour, and plus global cues look fairly upbeat, particularly tech, US tech.
Well, that's right. Yesterday's fall actually was a little bit, you didn't feel very comfortable by the time we finished off. But hopefully things stabilize. We have the expiry-related factor as well that will play out today. But as you said, global cues looking better. And hopefully, all this...
The mid-cap should perform, right?
That's the big question, right? And I think some movement in terms of Ukraine as well. So hopefully we get some kind of, clarity on that front.
China, Ukraine,
yeah.
Lots of hotspots. Lots of hotspots. But hopefully, they'll all, as we wrap up this year and 25 days to go, the picture will look much cleaner, much better into 26. That's the hope at least, right? Now, let's start from the beginning in terms of what you need to know as we begin this session. Sharp rebound in US equities. And when I say sharp, the Nasdaq is up 2.7%. Now, that is massive, big, right? S&P about 1.5% higher. And it was largely led by, as you can see on the screen, technology names. NVIDIA was up 1.5%, Amazon was up 2.5%, Alphabet was up 6%, and so on and so forth. NVIDIA, the big one, of course, and I think this is the market reacting to Trump administration's report saying that they may allow NVIDIA to sell back into China. They've been out of China, zero revenues from China, and it's one of the largest markets for chips, advanced chips, AI chips. So that, I think, at the margin did help. Alphabet, that is Google, a 6% move. Gemini 3, and we spoke about this in some detail yesterday morning, right? Now, that's one bit, which is AI. So there have been two pain points. One, of course, this AI wobble and questions around ROI and whether more capex will go in, and will that further push out returns on investment, etc. That is still a question. I think we won't have the answer anytime soon. The other, of course, is much more immediate, which the market seems to be fixated on, which is the December meeting for the Fed. For some reason, really important, but market pricing for a December rate cut continues to rise. So that is, I think, the other one which is helpful. So last night you had one more Fed member, a voting member, sort of backing the fact that he'd like to see another rate cut. Although he did say it's meeting to meeting, but in December he'd like to see a cut. Macro markets, 10-year yield was down 3 basis points. The oil price went up about 1.5 Brent, so 63.4. But basically it's been bouncing around without too much directional move, big positional move. You have Ukraine's President Zelensky, and we'll read out the quote, like the exact bit in just a bit. But he basically, he said a lot. But he said that from what I could make out, he said, well, he's more open to the idea of striking some sort of a US brokered peace deal with Russia. And he kind of sort of alluded to the fact that what's being proposed now, as opposed to earlier, is much more streamlined. So does that bring us one step closer to so far, Ukraine has been urging Ukraine to fight. Ukraine has been saying we'll fight. They've been asking US for help. So this looks like they're cooling down in terms of their ambitions with regards to the war and what they can achieve there. Trump and Xi, right? That's the other one. President Xi of China, they held a call to discuss trade, Taiwan. There was, of course, a talk around Russia's invasion of Ukraine as well. And Trump essentially said that he's agreed to visit China in April, and he in turn has invited President Xi of China for a state visit next year. So this is, again, move forward, and that's the big rivalry, the big strategic rivalry, which is not going to go away anytime soon, but a bit of a thaw, as markets would like to see. Trump basically said our relationship with China is extremely strong. That's the other bit. Here in India, of course, markets have been, it's kind of one step forward, two steps back with regards to expectations of when we will see some sort of a thaw in India, US, but no sign of it at all. So we'll just wrap it out with levels and just support levels. 25,852. Yesterday's 100-point fall brought us closer to some of these levels. 25,852 is the 20-day moving average. It's been moving up. And, of course, for the Nifty Bank, it's 58. 363, which is the 20-day for the Nifty Bank as well. So those are levels. On the upside, I mean, there's a swing high. There's a bunch of resistance levels. You basically come off a little bit. So that is much more easier for both the Nifty and the Nifty Bank in that sense. But 20-day is like, as they say, the Lakshman Rekha, and we shouldn't come very close to it and, of course, not break it. And I don't think we will, at least looking at the overnight reaction. GIFT Nifty will give you a quick sense of where we are starting. We'll pick it up from there. There was in the morning, about 1.5, 2 hours back, some problem with the GIFT Nifty. It was not really updating properly. I hope these rates are correct. But what you have on your screen is about a 70-odd point lower implied open. Nigel is standing by with the F&O positioning and the stats. Nigel, over to you.
Well, yesterday's fall actually was a little bit worrying, the way we ended in trade. But, the hope is that, in fact, with global cues fairly positive, you'll want the Nifty to see some kind of a fight back in today's trading session. But the Nifty in yesterday's trading session, that fall was a little bit worrying. Now, in terms of the rollover picture, given that today is the monthly expiry, the Nifty more or less in line. The Nifty Bank relatively lower if you compare it with the last few series. So the Nifty Bank rolls are actually much lower in comparison to the averages getting into an expiry day. So there could be a lot of action left actually on the Nifty Bank in today's trading session. One of the factors that played out yesterday with regard to that fall was the FI, they turned sellers, close to around 4,000 crores in terms of selling. But two factors out here. One is getting into expiry day. And the second factor, there was an MSCI rebalance that took place yesterday. Net, there was supposed to be an inflow, but the gross volumes were massive. So, difficult to understand whether or not that 4,000 crores was genuine selling. Today, we'll get a better trend, I think, with regard to the FI net sell number. The DIs, though, they turned buyers yesterday. The FIs, after a while, they went ahead, they added some long positioning. They're still net short with close to around 86% of the positioning on the short side. But in yesterday's trade, the call writers, they felt that they're back in the game. And that was precisely what the FIs did as well. Aggressive call writing is what we saw in trade yesterday. And because of the kind of call writing that we saw, close to around 5 calls were written for every 1 put. You had the PCR that came down from around 1.4, just around 2 trading sessions ago. It came down to around 0.77 odd. So the PCR is moving to the lower end of the range after almost testing the higher end of the range at around 1.5 that we saw in the past week itself. So a couple of calls that were written should come up for you. 26,000, 26,100, 26,200. Aggressive writing is what we saw in yesterday's session. Which brings us to the levels then. 20 DMA, important. 25,850, crucial level on the downside. Last couple of trading sessions, we're going to around 26,150. The high is around this vicinity. And the options data as well suggests that in the near term, this becomes a bit of a resistance zone. So that's the important mark. And on the Nifty Bank, that's the one that will have to fight back. Rolls are relatively lower, and it's still trading comfortably above that 20 DMA or around 500 points higher in comparison to 20 DMA. So that's the one that will have to fight back today. But more than the Nifty, we're talking about levels close to all-time highs. I think the broader markets need to participate because there's been a stark underperformance that we've seen in the small cap index. And in yesterday's trade as well, all through the trading session, actually, you had the breadth of the market that was negative. So some stability on the headline index and some performance on the broader markets is something that the street will be looking forward to. Expiry day, final hour of trade will be extremely volatile.
Thank you. And let's get to the big equity calls of the morning then. It's Jonathan Garner of Morgan Stanley who says investors were generally constructive on the 2026 risk outlook and formed a strong consensus on US relative valuation appeal within Asia's growth and AI cohorts. He also says that their overweight view on India and underweight view on Taiwan are still contrarian, and most investors agreed with a K-shaped outlook for Chinese equities and upside for Japan.